Hello, everyone. How are you doing? Good afternoon. Trust the week has been fine. Today is the last day of the week, last trading day of the week. So, how was your trading week? I was trading this week. Is it fine? Do you make some profits? Okay. Now, as you can see on my screen, you already know what I'm about to talk about. So, I sent out this on 17th of May, and I wanted to see what your responses are, right? So I said, if you are in this category, let me know by raising up your hand or say NISA. Usually, what you know and understand about trading signal is that a trade signal comes like this. Example, buy USD ZAR, right? Buy USD ZAR. And then you get the entry, get the stop loss, the take profit one, and take profit two. So that's how majority of you are used to this. This is how you know what a trading signal is. It comes with the entry, the stop loss, where you should take your profits and where you should book external, like more profits. That's it. Now, I said, by the way, but the way we do it here, just don't seem to understand. And I said, it's okay not to. Yeah, it is okay to not understand how we trade in STF, right? You do not understand what we do. I just send a markup in and find it really confusing to be able to really tell what a trade signal is from the chart. So it is okay to not understand that. And then the next paragraph, I said, we send markups before that has a point of interest. And later, you just see that we post after with risk to reward, 1, 2, 3 or more. And you find it very confusing to understand how we trade. So, yes. So, first, I come up with a point of interest, I assign it to you. I'm looking to buy here. And then after a couple of hours, couple of days, see me post again, risk to reward, trade has played out, giving a risk to reward of 1 to 3 minimum. Right. And then you just do not understand what to do when you see the trading signal. And I said, if you are in this category, signify please, so I can assist you. And then we had about 14 comments about people saying they do not understand, they are in this category and all. So, yes. And then the next, so a couple of minutes later, about 5 minutes later, I said, just two people so far. I would assume that the respondent can understand what we do here. And then a couple of more people commented on that. And then people were saying they do not understand what to do when they see the markups. They don't understand how I do it or how we trade here. And seeing your complaints, I said I was going to make a video to explain to you how we trade and what we do in STF here. Okay. And then I said everything that's known now was once new to me also. And that's the truth. Everything that I know now was once new to me. Yeah, so everything that I've known now were at some point in the past new to me. So I do not know some of them. I just got to know them also in the past. And I said it is a journey from unknown to known. That's it. And then more people kept commenting as days passed by that they do not understand what we do. They will need a video analysis of me explaining. I believe that will help you. And then I said the next day that a lot of comments, I will make a video analysis explaining how to understand what we do here, okay, and what to do after seeing the trade ideas that have been sent here. If you have questions also, drop them so I can attend to it while making the video. Thanks and have a good trading day. All right, so yeah, so that is why I'm making this video so I can explain to you what we do here. Now, if we come to the chart, let me quit this. Okay, no, I'm gonna leave this because I might still need it. Yeah. So now the way we trade is quite different. It is the same, everybody, how do I put it now? A lot of people like to be fed. Like they don't like to do the work. For example, you want me to just send you the entry, the stop loss, and the take profits. And then I actually sent a poll in the general group, and we were having a conversation, and I was like, which one would you guys like? Me and other educators calling out a trading, like we should call out a trade signal, giving you the entry, the stop loss, take profit areas, or you just want us to call the point of interest for you. Which one would you prefer? And I mean, I was surprised because a lot of them actually were okay with we just giving them the point of interest, and they will go ahead to look for the trade ideas themselves. And I'm gonna say I was impressed to see that quite a number of people, a larger percentage of people that voted, wanted to look for entries themselves. They were like, Coach, just give us the point of interest. We will look for the trade ideas by ourselves. And I must say that's something really, really encouraging. So now for the free channel, for those of you that do not understand how we trade, this video, I believe, is going to help you. So when next you see a markup, you know what I'm trying to communicate with you by sending those markups. Now, the way I trade, I always like to start my analysis from the higher time frame. That's it. Very, very important. My analysis always starts from the higher time frame. So I'm not just going to open my charts, just click trading view, open it, and then go straight to the 5 minutes and then take a trade right off the 5 minutes, just like that. No, I wouldn't do that. I always make sure that I am positioning myself in accordance to what the institutions want to do. And how do you know what the institution want to do? You need to be able to read bigger time frame structures. You need to be able to understand and make the bigger time frame your first go-to when you open up your chart. Why? Because we do not control this market and we have a very small amount of money compared to what the institutions are using to trade. Therefore, we need to position ourselves in accordance with these big guys in order to really make profit out of this market. And what I'm saying is, even though you have $100,000 in your account, it is still very small compared to what the institutions are trading with. Therefore, we cannot control the market. And if we cannot beat them, you guys remember that saying, right? If you can't beat them, you just join them. I think that's the situation we have when trading also, because we cannot beat these guys. If they want to sell the market is going to go down. There is nothing you and I can do to push price against them. No. If they want to take price all the way to the upside, price is going to go to the upside, like irrespective of whatever buyers we have. So now, knowing that, understanding that the institutions move price and they move it with a very big amount of money that I do not have. So the best thing to do now is to be able to position ourselves in line together with what the institutions want to do. So if the institutions wants to sell, I want to be looking for selling opportunities also. If the institutions are buying, I want to be buying also. That is why I always come to the bigger time frame to do my analysis, because it is on this bigger time frame I get to see what the institutions want to do over time. Are you guys with me? Definitely. So I go to, when I open up the trading view chart, I start the analysis from the bigger time frame. And what am I looking at for on the bigger time frame? Two major things. I'm looking at two major things on the bigger time frame. I'm looking at where the liquidity is and where the imbalance is. That's it. Forget every other noise. Forget every other noise. Those are the two most important things you want to be looking at for on a higher time frame. Where is the liquidity and where is the imbalance? That's it. Two very important. Where is the liquidity? I'm saying it again. Where is the imbalance? That is the essence of the bigger time frame, the daily, the weekly, the monthly. I'm I'm going to this time frame to spot the liquidity because over time, over the years of trading and seeing it week in, week out, week after week of the institutions. I mark out the liquidity on a bigger time frame, and then they go and run on the liquidity. That's strengthened my belief that the higher time frame, in order for me to position myself in line with what the institutions wants to do, or what they want to do rather, I need to go to the bigger time frame to check where the liquidity is and where the imbalance is, because these two things are going to serve as the basis for, or they're going to serve as the reason why price or why the order flow is actually moving in this direction. I'm going to show you some couple of examples I've given also, still in the same free channel group. Same. Now, because on the daily time frame, I come to daily time frame, I'm looking at where is the liquidity. So what I'm trying to say in essence, while spotting the liquidity, is what is going to be the order flow. That means the continuous price movement in one direction, right? Order flow. Price is going to the upside. Monday, Tuesday, just going there. There's going to be some retracement, but generally, price is going to the upside. That's what we call order flow. That's going to the upside. I think somebody said in the comment section that you do not understand what order flow is. So I just answered it. Right. So order flow is the continuous price movement in one direction. Now, doesn't mean there won't be retracements. There will definitely be retracement, but overall, you can tell that price is going to the upside. And why is that happening? Number one can be because of the presence of liquidity to the upside that institutions have already seen, and therefore they want to go for that liquidity. So price can be really far down and then give you the confirmation I want to start buying. And then institutions have positioned themselves with the aim of targeting that daily highs. So therefore, the institutions will continue to take price to the upside until the daily liquidity has been captured to the upside. That's why once I mark out my higher time frame liquidity imbalance, once price has captured it, I'm done with that particular asset. Because to me, I feel this trade now is complete. The order flow now is complete. Yeah, price can still buy way to way past, even after taking out the liquidity, it can still go all the way up. But the condition for me has been met already. I'm going to move to something else, to another asset. Okay, so the most important reason why you should start your analysis from the bigger time frame is because you want to be able to spot the liquidity, spot the imbalance, and then those two things are going to position you for what is to come. So when you see a daily liquidity to the upside, you can tell to an extent that the institutions might begin to take price to the upside because they want to capture this liquidity. So you've been able to establish a bias already. You've been able to establish the order flow for the next couple of weeks, depending on how long it takes for the institutions to take out the high, the liquidity. Right. So when I send a trade chart, the first thing you always see is there is always a point of interest, and then you see liquidity or you see an imbalance. Those things will always be present in my chart because I have very good understanding of how important it is, of how important liquidity and imbalance is to trading. Now, I'm not talking about other stuffs that are not in that. I'm not saying other stuffs are not important. They are, but the two major ones that are very important to me is the liquidity and the imbalance. So I go to the higher time frame to spot them. So when I spot the liquidity and all, then I'm looking for what? A point of interest. When I see when I see the point of interest now, the next thing I'm doing is I'm gonna wait for, because why I'm waiting is because this point of interest are on the bigger time frame. And I have a principle of not going above 30 pips per trade. Or should I say my personal law, or just believe that anything above 30 pips now is too much for me. So I always like to limit my stop loss to 30 pips. And my point of interest is coming from a very big time frame. So if my point of interest is coming from a big time frame, I cannot get in with limit order right there because the stop loss is going to be way too much. And some of them, I'm waiting for extra confirmation in order for me to take the trade. So when I send a trade signal to you, you're going to see the liquidity, you're going to see the imbalance. And most of these trade signals are always on a higher time frame, 4 hours, daily, weekly. So now let's take a look at some of the trading signals I've sent out to you. Now, before this, we're just going to look at, before this, I called Eyes on Card Chef. So let's look at, let's go up a little bit. So AUD USD, this was also a trade signal I called out to you guys. Before then, let's keep looking. Let's go to where AUD USD is. Where is, so here is my AUD USD analysis. Based on, be on the lookout for possible lower pricing inside this imbalance. Target for me is the daily lows. So this is it. This is a trade signal. My students, they understand this. They already know what to do when they see this already. So for those of you that are here now, when you see this, you open the chart. What you are expecting is entries, stop loss, and take profits. But then when you see this, like, what is it saying? I don't understand. What should I do? Where should I get it? Where should I put my stop loss? Where should I be looking to take profits? So in this area here now, I've given you where the take profits should be, overall take profit. But then the entry, where should be the entry? Where should my stop loss be? So this, yeah, let me pull this up now. Yeah, so this is it. This is a trade signal. But now, how do you interpret this now? For those of you that do not understand. So when you see this, first two things I want to talk about is, now I have this, we call this parallel channel. So that's what the tool is called on TradingView. It's called the parallel channel. So now I have two colors that signify two different things. Number one, when you see this on my chart, when you see this green parallel channel, this is me telling you that inside this parallel channel, you can be on the lookout that price is going to reject and buy to the upside. So when you see this green parallel channel on a chart, a signal I sent to you, what I'm trying to tell you is inside this parallel channel, price will go to the upside. Now, I may not be 100% correct, but that is what I am seeing based on my analysis. That price should come inside this parallel channel and reject and go to the upside. That's the first thing I want you to understand. Okay. Now, the second one I have, again, when you see red, this red parallel channel, what this means is that I, I'm looking at price coming. I'm looking at price now buying into this red parallel channel, and I want price to drop from there. Those are the two things I want you to understand for now. First, the first one, the green parallel channel. What did I say? This is where I'm looking at price rejecting and going to the upside. Therefore, in summary, all I'm saying is in this green area, expect buys. In the red area, expect sells. So I think that would help. So when you see this now on my chart, after watching this video, you know what these two things are already. So already you know what they are. So once you see it, you already know, oh, okay, I think this guy, I think coach is trying to tell me that price is going to buy from this area. Now, another question is, how do you know it's going to reject from there? How do you know it's going to this? How do you know it's going to that? I've been trading for a couple of years, so I know to an extent where price can get to and reject, and where price would just blast through off and on and on. I still take losses, definitely, right? But then I've been trading for a while. I know these things. So the green area now, we are expecting price to buy from. The red area, we are expecting price to sell from. Just try not to forget that, okay? Because every of my charts, you're going to see these two things there. So now, having said this, if we come back to this again now, Now, can you see the parallel channel on this chart? Yes. What kind of parallel channel is this? Red or green? This is a red parallel channel. What does it mean? Sales. So anytime you see a red parallel channel on my chart, the first thing I want your mind to register is sales, 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 sell, 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 sell. And then when you see a green parallel channel, what I want your mind to register is buys, buys. I should be looking for buying opportunity, buying opportunity. Okay, register that in your mind. Now, the next thing is, what should I do in this area? Now, I've given you where to buy and where to sell. But now I'm not giving you an entry saying, okay, sell at 0.6700, stop loss 0.68200. No, this is where it gets a little bit confusing the more for some of you. Now you know that this red area is where I've called out, where I want you to look at selling opportunities. And you know that the green area is where I want you to be looking for buying opportunities. But the next question that comes to your mind is, how do I know when to now buy? How do I know when to now sell? That's another thing. It's a different thing to know, okay, this is where I'm to buy. So the where has been answered. The next thing is now, when should I buy? Or when is the best time for me to buy? So that's what I want to answer. I'm going to use this AUD USD as an example also. So let's go to AUD USD. All right, so this is the AUD USD. Now, this is the before. This was the markup before. I marked it up May 15, right? And then, like I said, I'm expecting price to drop because of what the daily liquidity, the imbalance, and then my point of interest also was on the daily. So because of I have some level of understanding of how the market operates, I saw that the liquidity to the upside has been captured. I've seen these things play out countless number of times. So I know what should happen next after seeing something. Because I've come to a place of, or I would rather say I'm in a position of, how do I put this now? Uh, I'm presently at a place of oneness with these candles. That's what I would say. So when I open up my trading chart, it's like the candle and how we are just connected. And then we are all passing information to one another. So I'm telling the candle, this is what I want. The candle is giving me a signal back. Okay, this is how it is. This is what has happened. So you cannot do this because of this. Take a look at this area. Take a look at this. So the candles are communicating with me, telling me things. And I'm taking those information, processing it, giving the candles back, giving back information to the candles as, okay, this is what I'm going to do, or this is what I feel like doing. Is this going to play out? And then I look again, candles are giving me more information. So I'm gathering all the data together to then arrive at a conclusion, just like what happened for AUD USD. I've seen this thing play out countless number of times. We had it for AUD NZD. I told you when, as soon as price captured that daily lows, the liquidity to the downside has been captured. Therefore, let's be on the lookout for higher pricing so price can take out the liquidity to the upside. It happened. For AUD CAD, Euro GBP price took out the liquidity to the upside. I told you the next thing is going to be a possible run on the liquidity to the downside because I've seen this thing happen over and over again. AUD CAD, same thing happened. And now we have it again on AUD USD. Now, you might not be able, or not might, you will not remember if you do not journal your trades. If you don't keep track of your markups, if you don't go back to your past trades, there are some things you will not just remember because you do not keep track of it, so you don't even know if it has happened before. I've seen this particular setup happen quite a number of times, so I know what is going to happen next. Seeing that the liquidity to the upside has been captured here, this I knew seeing this imbalance. Let me just wait for this candle to close. Let the next daily candle close so the imbalance can be completed. I'm waiting for a push up into this imbalance, and then I'm going to take a sell to the downside, aiming for the daily lows as my final target. And this is where we are today. Boom, price came into the imbalance, dropped, captured the liquidity. This will not be the last time stuff like this will happen. No. So now, what do you do when you see this red parallel channel? Now, what you're going to do, the first thing, very first thing, because why you cannot just take this trade immediately because coach says it's going to drop inside the imbalance. As soon as price comes into the imbalance, you just take a sell immediately. I mean, you can do that if you have a lot of money, but then the stop loss, since you're trading imbalance, has to be at this high. Now, what you've done is you've entered a trade with 112 pip stop loss. That is very big. 112 pip stop loss is too big for me. I don't know about you, but it's too big. Now, you can do this if you are not a risk to reward kind of person. Because now, if I'm getting in here, putting my stop loss up here, if I'm targeting this daily lows, what is this 1.26? What this means is I'm risking whatever I'm risking here, I'm going to make 1.26%, or rather a risk to reward of 1 to 1.26. What that means is if I'm risking $100 on this trade now, at this daily lows, I'm going to be, if the broker close me, my TPs at this daily lows, risking $100, the broker will close me at $126 profit. So I'm risking $100 to make 126. That's more than a little bit above 1 to 1. But no, I'm risk to reward conscious, and I cannot take a trade of 128 pips stop loss. No, it's too big for me. So what I'm going to do is what I want you to do now. The question, what do I do when I see these things? When you see the red, the first thing I want you to do, scale down time frames. You can write that down. Scale down time frames. And what do I mean by scale down time frame? Go to the lower time frame. That's it. That's why I have so many time frames up here, as you can see. Go to the lower time frame. That's what you're going to do. So price, remember, I said I want price to come into the imbalance. So I'm going to be on the lookout as soon as price is approaching the imbalance. Now, one way you can keep track of this trade, first thing you can do is set an alert on this parallel channel. So I can add an alert and say, once price touches this parallel channel, TradingView should notify me. So now I may not be on the screen. I may not be available watching this because I've got other things to do. You can set an alert on this parallel channel. As soon as price touches it, TradingView will notify you on your phone. And then that's going to make you remember quickly, oh, okay, price has gotten there now. And then when you've gotten the notification, you can scale down time frames. Now you go to the 1 hour, 30 minutes, 15 minutes. You are going to the lower time frame. And why are you going to the lower time frame? Number one, very important reason as to why you're going to the time frame, why you're going to the lower time frame is because you are not okay with having 120 something pip stop loss. So you're looking for how you can still join this trade having a very small stop loss. So scale down to the 30 minutes now, smaller time frame. Now, which of the time frames should I go down to? There is no specific time frame to go down to. That's it. There's no specific time frame. I used to switch. Sometimes I'm on the 1 hour or 30 minutes because I'm looking for some certain things. And when I see it, I know what's up already. Now, on this one, to the 15 minutes, look at what happened here. And now, look at this. Now, you've been able to scale down from the daily time frame down to a much, much smaller time frame. Now, what are the things you are looking out for on this small time frame? Now, remember, I do not want to get in because the stop loss is too big. So what am I looking out for that when I see them, I can join this trade? That's it. Now, look at this now. Price on the 15 minutes. Price came into the imbalance. That was the first condition in order for you to take this trade. Remember, you're looking at price coming into that daily red parallel channel. And what the red parallel channel means is you're looking for what? Selling opportunity. But you do not want to take the trade because the stop loss is too big. Therefore, you can leverage on the opportunity and understanding of how to play lower time frame. So now price comes like price on the 15 minutes, you scale down to the 15 minutes, and the first thing you're looking at for is what? Structure. You want to see a structure shift to the direction we're looking to take the trade. That's a very, very important thing to look out for. You want to see a structure shift to the direction you are looking to take price. If you're looking to sell, you want to see a structure shift to the downside. If you're looking to buy, you want to see a structure shift to the upside. Very, very important point. And write that down also. So the time frame, the lower time frame you have gone to 15 minutes, 30 minutes, 25 minutes, 20 minutes, 40, 50, 1 hour, 2 hours. You want to be seeing the structure shift to the direction you're looking to take the trade. So now on the 15 minutes, what I can see was price was giving us some highs and then some lows. You have this high, this low, this high, this low, and then this high up here. And then price gave us what? This push to the downside. We can see the response that price gave, a very big push to the downside, and then broke the structure. Yeah, I wrote SWS breaker structure. This is a structure within structure break. A little bit advanced, but it's still some kind of breaker structure. Okay. Now that price has broken structure to the downside, what this means is that this is giving me some kind of confirmation, or it's giving me some kind of story. This is explaining some kind of how do I put this now for you to understand? Okay, let me say this is giving me some kind of confirmation that price might begin to sell down now. So instead of somebody that got in immediately, price came into the imbalance and have 128 pip stop loss. The same person is aiming for the daily lows. And if price gets to the daily lows just like it did, the person who was risking $100 with 128 pip stop loss, rather. So 100 and I can't even remember what the stop loss is again, but let's say 128. The person was risking, sorry, the person was risking $100, right? Now the person is aiming for the daily lows. The person will make 120 what? $6 profit. But because we have an understanding of how the market operates and we do not want to get in with a very big stop loss, this is what you're going to be looking out for. So remember the daily point of interest. Once you see the parallel channel, if it's the red, I'm trying to tell you to look for sales. If it's green, I'm trying to tell you to look for buys. So the next thing you do, you wait for price to get to that area. As soon as price gets to that area, the next thing you do again is you go down to a lower time frame. There is no specific lower time frame to go down to. It can be 15, it can be 30, it can be 1 hour. You will know which time frame to go to. Okay. Yeah. So now when you are on the time frame, you are looking for what? A structure shift to the direction where you want to trade. So if you're buying, you're looking for a structure shift to the upside. If you're selling, you're looking for a structure shift to the downside. So now on this time frame, we have a structure shift to the downside. I have this now as the top range. I have this as the down range. Range is very, very important when trading in the markets. Importance of range cannot be underestimated. One of the importance of having a trading range is because the range helps you to know the area where you are looking to buy or the area where you are looking to sell. Now, when you have a range, you've boxed in a specific area where you are looking for opportunities to trade. That's it. So I'm not looking for anything above the range. I'm not looking for anything below the range. That's one of the importance of the range. So now we have our top range, we have our down range. The same thing, remember, on the daily time frame, this red parallel channel is coming from where? A daily imbalance to the left. I'm looking at price coming into that area to sell down. But now, why did we not take that trade? Why didn't we set a limit? Because the stop loss, if we got in at the entry, the open of that imbalance is going to give us 128 p stop loss, which is too big. And getting to 1 to 3 is going to take a very long time. Therefore, when we come down to the lower time frame, we are looking for the same thing that we looked for on the daily, but we couldn't trade it because the stop loss was big. So when I come down to the lower time frame, I'm looking for the same thing again, the imbalance again. Yeah. But now I can't trade this one because if I put my stop loss above this area, it's going to give me a 10 pip stop loss. So this is a 10 pip stop loss. This is 128. I've been able to remove 118 pip away. And you know what this is going to do to your risk to reward. Risk to reward now is 1 to 3 is going to be a lot faster to get to. Getting to the daily liquidity is going to be way more than 1 to 3 risk to reward. So now, when you see me post a trade idea, a trade signal, these are the things I want you to look out for before you trade. It's going to take you some time to master this, but this is how I want you to do it. Unless after calling out this daily imbalance, I wait for price to get here again, give me the distribution, come down. And then when I'm about to really take the trade, that's where I can now say, okay, everybody look to sell AED USD. Entry 0.69950, stop loss 0.67050, TP at this area. That means I've done all the work for you. And then I just give you the entry. But my students don't want that. They want point of interest. Coach, just give us the point of interest. Leave the rest of us. We'll do it. And I think that's a more better way to learn how to trade. Since you are not, I'm not feeding you every time. Because days when I'm not available, so what happens? You won't be able to trade. At times, I might not trade for a whole week. I might not even trade for 2 weeks at times. So what happened in that area? As in what happened during that period? You won't take any trade because you're waiting for me? No. So this is what I want you to do, okay? When I send a trade signal, you wait for price to get there. So the first thing is what? Summary now, you wait. No, the first thing is check if it's a red parallel channel or a green parallel channel. If it is a red parallel channel, okay, coach is trying to tell me I should be looking for sales. If it sales, right? Yeah. If it's a green parallel channel, coach is telling me I should be looking for buying this area. That's the first thing. The next thing you want to do is wait. Patience. That's it. Very, very important. It is part of the principle. Wait till price get there. Now, because I'm looking to buy, you can say, well, since coach is looking to buy, and maybe I can just sell down to that buy at your own risk. So I'm going to wait. Next thing you do is wait until price get there. After price has gotten there, the next thing you want to do is go down to a lower time frame. Remember, there is no specific time frame to go to. Just make sure the time frame is lower than the time frame you are on presently. And then when you go to the lower time frame, you are looking for the next thing is you are going to be looking out for the same thing you saw on the daily but couldn't trade it. The imbalance, mitigation candle, institutional cube. When you see it, wait for what? Confirmation. Let structure shift to the direction where you want to be trading. So if you're buying, let structure shift to the upside. If you're selling, let structure shift to the downside. After that, then you can now spot the entry candles, either the mitigation, the imbalance, anything like in this case now, after the structure shift, I saw the imbalance. Then when you spot the imbalance, you can now wait, set your limits, entry, stop loss is going to give you very small stop loss. And then your TP at 1 to 3. Your first target should always be 1 to 3. And like I said, overall TP is the daily lows in this area here. So then the last thing you want to be able to do is wait. Trading is patience. If you have an objective in mind, as long as you've made your 1 to 3 already, you can now. Well, this depends on you now. I will not force you to do this. So it depends on your appetite. Can you wait to get the full package? This is a 1 to 13 risk to reward. So if I was risking 100, I made $1,300 profit. But then I waited from 16th of May, and then the trade finally ends at the 24th of May. So it took a while before this trade got to target. So it depends on you now. There are different ways to do this now. Or you can just take your profit at 1 to 3 and close. That's another way to do it. So the first way, take your profit at 1 to 3. That's it. And then you close. The second way, you wait for price. Once price give you your 1 to 3, take out some profit, stop loss to break even, and then let's see how far it can go. The third way, or should I say fourth way rather now, you can apply the law of splitting lot sizes to still have the same profit risk of the same profit target. What I'm saying is, and I used to discuss this with my students, but then this one takes a while before it happens. Now, if I'm risking $100 now on this trade and I'm going for 1 to 3. So 1 to 3 is in this area here. You can see this one even came very close to 1 to 3, but then didn't get there, rejected, came back to entry. So this trade now, most likely, if you push stop loss to break even, would have taken you out. So there are some disadvantages that comes with all of this also. Because I've been in a trade, I can remember this trade, Euro GBP trade. There was one trade on Euro GBP. It gave me 1 to 3. I didn't take profits. Came back down to like 1 to 7. I didn't take profit because I was aiming for like a 1 to 16 or so. And then price, after coming down to like 1 to 9, started to reject and then took me out at break even. Now I should have closed some profits. I should have, taken something out of the market. But then I just wanted like the whole full deal, the whole full package. And I was ready because I know if this rejects, it's going to take all the profit back. Well, so are you ready to watch all the profit go? And then that actually happened. But then after the liquidity was captured to the upside, I got in again. And then that same daily lows, finally, the institution came for it. So that's it. And then another way you can do it, this one is a little bit too advanced, but then I'm just going to teach it here before I round up how you can book profits, still have positions running, full 1 to 3 and all. Number one, 1 to 3, yeah. Price has got into 1 to 3. You're risking $100 now. Let's say you're in with a lot size of 1.0. Okay, I'm just giving a hypothetical example now. Of 1.0 lot size, you're risking $100. Now the price has gotten to 1 to 3, yeah. Your running position should be at $300. If you close half of 1.0 lots, you're going to be left with 0.50 lots. What have you closed? You've closed 150 already. So 150 has been closed, added to your balance already. And now you have $150 profit running with a 0.50 lots. Now, if this 1 to 3, let's say it doesn't go back to entry, this 1 to 3 price continues to drop, and this 1 to 3 gets to 1 to 6. If this gets to 1 to 6, your same 0.50 again will now be at $300 profit again. Now you close half of 0.50 again, your lot size will be at 0.25, $150 profit. You've closed 150 again. Now, when you add that 150 you've closed to the other 150, that's 300. That's 300. So now at 126, you've made your full risk to reward on that trade. But now, this is a little bit advanced and still good because instead of just closing the old $300 at 1 to 3 without having any more positions running, you were patient enough to get to 1 to 6, reducing the lot size. So now you've closed your 1 to 3 already. You have your $300 profit added to your account. You still have $150 running with a 0.25 lot size. Now, if I were you, in this case, since I have my full 1 to 3 already, I can just put, all right, let it just get. Remember, at 1 to 6 is at 1 to is 150. Now, in order for this 150 again to get to 300, what needs to happen? This 6 needs to get to 12. So at 1 to 12 now, this 0.25 again will be back to $300 profit again. And then just leave it to the overall daily target. This is about a 1 to 13. So by the time you're closing out this trade, you'll be closing this trade with approximately, give or take, more than $300 profits. So let's say about a hypothetical example now, let's just say $400 profits. So closing $400 profit now, overall, you've already closed the 300 before. So that's about $700 profits in total, 1 to 12. You still made your 1 to 3. So even though at 1 to 6, this decide to reject back up, you've made your full 1 to 3 already. So there are different ways to do all of this. But then if you can't do all of this, you don't have the patience to wait. Once it gets to 1 to 3, just take your profit and then just leave it. And then leave the market and see how far you can go. But then that is how to trade the signal high send out. I've told you what to do. Follow these things, follow the procedures, and you will see that this style of trading is very, very cool. Okay. Yeah. So thank you so much. Have a good day. Bye bye.